Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody's having a fantastic week so far and hope everybody's having a great start to the year here in 2023. It's that time again. We're going to be talking about our local real estate market, and today what we're going to be doing is discussing some real estate related metrics from the first quarter of 2023. We're going to be looking at specifically some residential real estate related metrics here in Leon County from the first quarter of this year. We're going to compare those metrics with the first quarter of 2022 to give you guys an idea of how our local residential real estate market has performed over the last year, and also to help give you an idea of where the real estate market here in Tallahassee is headed. And basically the goal of the video is to inform you guys and give you guys some good information so that you can make wise buying and selling decisions if you're looking to buy or sell any real estate here in Tallahassee. So we're also going to be talking about some broader real estate related topics, as well as some broader economic related topics and how those will impact our local real estate market. And I'm also going to share with you all a little bit of information about what I'm seeing in my day-to-day business dealings buying and selling real estate here in Tallahassee. So overall, what we saw basically in the first quarter of this year is a overall slowdown in activity. And I'd say we saw an overall softening of the real estate market. Home prices did continue to go up from a year ago, but there is some indication that we may see home prices start to go down a little bit. Maybe not decrease, but at least the rate of increase will start to slow down. So we'll get into a little bit more about that, talking more about that. So the first thing we're going to do is let's jump into talking about the real estate related metrics from the first quarter of this year. So the first thing we're going to talk about is the number of properties listed for sale, which I refer to as our housing inventory levels. So as you guys probably already know, we've had a shortage of housing for quite some time. It's been a problem for several years, and it basically just seems to be getting worse and worse and worse. So in the first quarter of this year, that trend continued. We saw a 14% drop in available homes listed for sale here in Tallahassee or Leon County. And that's coming from a time last year when inventory levels were low. So to see a 14% drop from a year ago, it's just like it's getting worse and worse. So there's several reasons for that. The available homes is low and continue to get worse. I think the number one reason is because we've seen such a drastic rise in interest rates. So the way that affects the number of homes listed for sale is that if people have 3 to 4% mortgages on their homes, they're not going to want to sell their homes and then buy a house and getting a 6 to 7% mortgage. I mean, so because it's going to increase the cost of their living drastically. So what you're seeing happen is people that would normally sell their homes, they're just staying in their homes longer and not selling because they don't want to give up their low mortgage rate and then have to buy a more expensive house with a much higher interest rate. So as a result, people are just staying put in their houses longer. They're not selling, and that's resulting in fewer homes on the market. So the other reason that inventory levels are low is that we've just had years and years of underbuilding new homes, and we're still catching up from that, unfortunately. And we are seeing more home builders coming into our market and building homes, but it's not at the pace that we need to see in order to make up for the shortage of inventory levels. So those are the two main reasons that housing inventory levels have continued to go down, and it's most likely going to be a long-term problem that we're going to be dealing with for some time. So, but I want to give you a little bit of context just to really drive home the point of how bad the problem is. So we're going to look at some years in the past to give you an idea of what housing inventory levels were in the past, in times where, the real estate market was different. So let's start out by talking about the first quarter of this year. So in the first quarter of this year, we had 1,843 homes available for sale on the market here in Leon County. Okay, we had 781 sales, which the sales represent the demand. So we had a supply of 843 homes versus a number of sales demand 781. So if we go back to 2015, which 2015 I would consider that kind of a balanced market, meaning we had a pretty healthy level of supply versus demand in 2015. So in the first quarter of 2015, there were roughly 3,200 homes available for sale. That's compared to 1,843 that we saw in the first quarter of this year. And we had a relatively similar number of sales in the first quarter of 2015, 764 versus 781 that we saw this year. So as you can see, similar level of demand for homes in those 2 years, but the supply of homes in 2015, the first quarter, was much higher. Almost twice, not quite twice, but almost twice as high as it was in the first quarter of this year. Now, if we go back to 2007, now that was a year where the market was basically polar opposite of where it's at right now. We had too many homes for sale back then. So in the first quarter of 2007, there was over 5,000 properties listed for sale, and we had a slightly higher level of demand in the first quarter of 2007 at 842 sales, but it wasn't that much higher. So, in 2007, we had way too many homes listed for sale, over 5,000 compared to only 1,843 now. So that kind of shows you how low the actual inventory levels are right now, and I just wanted to share that with you guys so you'll have an understanding of how bad it really is. So the shortage of homes is making it tough for home buyers, obviously, because they have so few homes to choose from, and there's compared to the available supply, there's a lot of demand for homes. So this, in my opinion, is causing home sales to go down, and that is reflected in the numbers that we saw in the first quarter. So in the first quarter of 2023, we saw home sales drop by a whopping 31% compared to the first quarter of 2022. So that's a big drop. There's a couple other reasons for that too, in my opinion, but the main reason we saw home sales go down is because of the interest rates. So the interest rates have gone up so high in the last year, it's made buying a home less affordable. So we went from 3 to 4% mortgage rate for a 30-year fixed rate mortgage to the first quarter of this year is about 6.5%. So it's a big jump in the mortgage interest rate, and that was the main factor for home sales going down. But also, the shortage of homes. Many would-be buyers are looking out there in the market, and they're just not seeing the homes available for sale that are interested in the price range that they want to pay. And because there's so few homes listed for sale, people are just choosing to continue to rent instead of buying. And then also inflation is part of it, just overall inflation, because if the cost of everything else goes up, it's going to eat into would-be home buyers' discretionary income, which is going to make it tougher for them to buy a house. So as a result, fewer home sales. So just a lot of things going on in the last year that have caused home sales to go down. So we saw a big drop in sales as a result of those factors. So the next metric I want to talk about is what I call the sale price to listing price ratio. It measures what a home sells for on average compared to the asking price of the home. So the sale price to list price ratio in the first quarter of this year was 98.5%. So that means on average, homes sold for 98.5% of the asking price. In the first quarter of 2022, that number was 100%. So in the first quarter of 2022, homes were selling for 100% of what they were asking. So what this means is basically home buyers in the first quarter of 2023 had a little bit more negotiating power than they did the same time a year ago. And then also average days on the market that it took to sell a home went up by 20% in the first quarter of this year. So it went from 45 days in the first quarter of 2022 to up to 54 days. So in the first quarter of this year. So if it takes longer to sell a home, that means that demand for homes has gone down. That's what we saw happen in the first quarter of this year. So the next metric I want to talk about, though, is home prices. So home prices actually went up by 10% in the first quarter of this year compared to the first quarter of 2022, which 10% is a big jump. So you got to remember, historically, homes have appreciated on average by about 3 to 5% a year. So what we saw in the first quarter of this year was more than double that. However, one thing I do want to point out is that while year over year home prices were way up, we did see a slight drop in home prices from the fourth quarter of 2022 to the first quarter of 2021. So home prices actually dropped by about 1% from the last quarter of 2022 to the first quarter of this year. It's not a big drop, and it could be an anomaly, so I wouldn't be too concerned yet, but it is unusual because usually the fourth quarter is the slowest quarter of the year because that's when the holidays are going on. So usually from the fourth quarter to the first quarter, you usually see an uptick in sales and an uptick in home prices. So it is a little unusual. We'll continue to watch that. If we see a drop in home prices from the first quarter this year to the second quarter this year, then we may have a problem because that would be highly unusual. But we'll keep an eye on it. So basically, those are all the metrics. But to summarize, overall, I mean, we basically had a slowdown of overall activity in the housing market here in Leon County in the first quarter of this year. Home prices were up year over year, but we did see on a quarterly basis home prices go down slightly. So that'll be something to keep an eye on, like we just talked about. And then obviously the other metrics we talked about, average days on the market, and also the average sale price to list price ratio. Also, they both went in directions that indicated that the market's softening as well. So we'll keep an eye on all that, and in the next quarterly market report, we'll report back on those metrics and just keep you guys informed on how that's trending. But overall, I think the market will probably continue to soften a little bit on a year-over-year basis. I do think as we get into the second and third quarter, we'll probably see home sales tick up a little bit because the second and third quarter are typically the busiest months of the year. My guess is we'll see prices. I don't think prices will drop, but I think that we'll probably see home price appreciation start to taper off a little bit. So instead of seeing like a 10% year-over-year increase in home prices, I think it's going to start trending down. We'll probably get under 5% by the end of the year. Could be even as low as 3 or 4% by the time we get to the end of the year. Now, listing inventory, available number of homes for sale, in my personal opinion, I think that that's going to continue to fall, and I'll explain why. It's kind of complicated, but it's worth getting into. So there's two things that are really going to drive the housing inventory levels. The first is inflation, and the second is the overall health of the economy. So inflation, the reason that's going to have an effect on our housing inventory levels is because right now what's going on is we have high inflation, and what the Federal Reserve is doing to combat that is raising interest rates. So if inflation remains elevated, the Federal Reserve is going to have to continue to raise interest rates. And if they continue to raise interest rates, that means mortgage rates are going to continue to stay high or even go up a little bit more. And if that happens, more people they're going to choose not to sell their homes because they do not want to give up their 3% or 4% mortgage for a 7% mortgage. So the result is going to be fewer people listing their homes for sale. The other thing that we talked about that I think is going to have an impact on housing inventory levels is the overall health of the economy. So we talked about this a little bit earlier, but home builders have an opportunity to help increase our housing levels by building more homes. And home builders have been building homes, not at the pace that we needed to, but they have been. But if the overall economy continues to do better, or do good and get better, then home builders are likely going to continue to build and build more, because if they see the demand there for homes, that they're gonna fill the gap that's needed, which is we need more homes on the market, so they're gonna build more homes. But if the overall economy slows down, home builders are going to scale back because they're not going to want to spend the money and their resources on building homes if they're not confident that the demand for those homes is there. What's interesting, though, is that the Federal Reserve is really trying to do two things right now. They're trying to combat inflation by raising interest rates, and they're also trying to prevent a recession. But the tools that they have to use to accomplish both of these goals run counter to each other, because if they increase the interest rates to keep inflation down, it's gonna slow down economic output, which could push us into a recession. But if they start to lower the interest rates in order to prevent a recession, then inflation's going to go up. So we're kind of in a catch-22. What I think is going to likely happen is I think that the Federal Reserve will continue to push the interest rates up, and I think we're going to slide into a mild recession by the end of the year. I think home sales are going to go down. I think inventory levels of homes available for sale are going to go down. And I don't think prices are going to go down overall, but I do think that we will see home price appreciation drastically slow down. We'll get down to, in the low single digits on average annual home price appreciation. That's what I think is likely to happen. But if I were you, I'm going to be paying close attention to inflation and the overall health of the economy, because I think it's going to have a huge impact on housing going forward. So if you are selling a home in today's market, then what you need to do is you need to get your house ready. You need to get your home prepared, make it nice. Homes are selling for a premium in today's market, and they're selling fast because there's so few homes on the market. However, homes that are outdated, homes that are in disrepair, homes that don't show well are sitting on the market still. They're not selling. If your home is in good shape and it's priced in line with what similar homes have been selling for in the last couple months, your home will sell fast. But if you try to put your house on the market without it being show ready, without it looking nice, it's likely going to sit, and then you're going to have to drop the price later only to sell it for less than what you would have had you priced it right in the beginning. So great time to sell, but you need to take the time and spend the money to get your house ready for the market. If you're buying a home, you need to have your ducks in a row. If you're getting financing to purchase a home, get your pre-qualification letter ahead of time and have that ready so that when you submit an offer on a house, you can also submit the pre-qualification letter along with your offer. Get to know your market, get to know the market that you're looking at houses in, get to know what the values are in that market, so that you're not offering too much, but you're not offering too low. You don't want to get into a situation where you're constantly being outbid because you're making offers that are too low. No one wants to get in that situation. So know your market, get pre-qualified, have all your financing in line, but also be patient. There's not many homes available for sale, so it can take a long time to find the right home. But when you do find the right home, if you're patient and when you do find the right home, act quickly, don't mess around, make a good offer, and if you do that, you'll have success at buying a home. So that's it for today's real estate market report, the quarterly market report. If you guys liked what you heard, give me a like on my YouTube channel. Also, if you have any questions about what you heard today, feel free to reach out to me. You can call, text me, you can email me, or leave a comment here on this video, underneath this video. Or you can reach out to me on Facebook or LinkedIn as well. So anyway, I hope you guys enjoyed the information today. I hope it helps you going forward with your real estate related decisions. And I will be talking to you guys soon in a couple months about the second quarter real estate market report. Thanks, and I'll talk to y'all soon. Bye.